You can see the breaking point right here in this chart. It may not look like it at first, but when you understand what this chart means, this is the most important and terrifying chart in the entire world. You should print this out and put it on your workstation, put it on your fridge, make sure your wife understands it. It shows how our nominal GDP growth has increased less than the increase in federal debt. And when you add in private sector debt, of course, it's much worse. But I'm not even really talking about that. Just look at the chart. The US economy has completely inverted, with nominal GDP growing by roughly 7 trillion, but the federal debt growing by 8.5 trillion.
And of course, the GDP growth that we have seen, the alleged booming economy that Biden and Harris have delivered.
Well, just look at your own life. Do you feel better off? It's all smoke and mirrors, because what they won't tell you is that only 1 trillion or so of the growth they've seen over the last 4 years is actually from labor force and productivity growth. All of the rest is directly from debt creation and inflation. It's fake. And when you exclude the impact of government spending, you quickly realize the economy isn't booming at all. It's barely breathing, and it's about to collapse. And that explains why the average wage earner in America has seen their income eviscerated in recent years, even as nominal wages have risen. The hardest part and the most frustrating part about this is, instead of looking at the stock market, I wish people would just think for a second about their actual lives. Are they actually wealthier today than they were a decade ago? Were they 2 decades ago? The answer is no. Why not? Because all of these gains that you see written about in the Wall Street Journal, the higher stock prices, the booming GDP, all of this stuff is coming from an enormous amount of new inflationary growth. It's coming from printing more and more money and borrowing more and more money and putting into the economy. We have an entire mirage of an economy.
It's incredible. It's why there's such a disconnect between what the official numbers say and what your average person experiences, right? It's why almost half of Americans have less than $500 in the bank.
Exactly. And look at this inversion. While it could be tolerable for the short term if economic growth skyrocketed and we saw some kind of a big return on all the deficit spending, that is not what's going to happen. As I've been warning my readers, a major recession is coming, and it's going to be far worse than anybody expects. And the warning signs are flashing everywhere you looked. Just exactly what you just said. Consumers are tapped out. They are running on fumes. Credit card charge-offs at U.S. banks are up 3% a year to their highest level in 13 years. According to the FDIC, the percentage of debt unlikely to be collected has now more than doubled. And of course, you know when that trend starts, it's going to get way worse. It's going to keep doubling like that. The job market, I'm sure people have seen if they're out there looking for work, it's completely changed. Unemployment is now rising, and that's another key signal that a recession has actually begun. All these factors are going to make it a lot harder to engineer a recovery from this big recession that is just beginning. So not only is our fiscal reality bleak, but politically, we are now less prepared than ever because we cannot reach the kind of consensus that we would need to try to avoid this massive crisis. Our economy is like the bus in the movie Speed. Remember, if the bus dripped below 50 miles an hour, it would explode? Well, that's kind of like the position our economy is in right now. If we don't keep pumping it full of credit and cash, it's just going to completely collapse. And that's why the next phase of this crisis is the devastating phase. And sadly, all this stuff is not only predictable, it's actually inevitable.
There's a reason why the world's best informed investors read my daily journal. Subscribe for free at portersjournal.com.